Good morning, dear learners. I, Dr. Vandana Sonkar, Assistant Professor at Faculty of Commerce, Banaras Hindu University, welcome you all to the next lecture of my course on financial literacy. This is week number 11, Understanding the Market Instruments and Accounts, and in the lecture number 52, we'll be going to discuss about the delivery instruction slip and blue chip companies. So, in the previous lectures of this module, we had discussed about the different types of account that an investor needs to open for the purpose of trading into the financial market. Now, in this lecture, we will be going to discuss about the concept of delivery instruction slip that helps them to place their order related with the transfer of share, as well as its features and the various terms related with the delivery instruction slip, as well as we will be also going to discuss the concepts of blue chip companies and its key features, and will understand how these blue chip companies can be very important for the investor for the purpose of making their investment in right or correct quality of the asset classes that are available into the financial market. So, let us start the first part of the discussion, that is the delivery instruction slip. Basically, a delivery instruction slip is a kind of form that an investor needs to fill for the purpose of moving their shares from one demat account to the another. So, this basically works like a check, and it helps in telling your depository participant to take the shares out of your account and send them to the another demat account. So, for the purpose of transferring the shares from one demat account to the another, and in an offline form, you need to fill the delivery instruction slip, with the help of which you can direct your depository participant to transfer the share certificates from your demat account to the other's demat account. The main features of the delivery instruction slip that in case of the manual share transfer, it is necessary for the investor to fill in the delivery instruction slip. Whenever you want to transfer the share in offline mode, you need to fill it by hand and submit it to your broker and the depository participant for the purpose of completing the share transfer procedure. You need to give permission to share transfer. That means by filling a DIS, delivery instruction slip, you are giving the depository participant a permission to move share out of your account and to deposit the shares into someone else's account. So, delivery instruction slip is basically used when you are interested in off-market transfer. That means it can be used to shift the shares between two demat accounts if they are with the different brokers and the investor wants to trade offline. So, here you can use the delivery instruction slips when you have not transferred the power of attorney or DDPI to the brokers or the depository participant for the purpose of giving them a right to invest or transfer your share on behalf of you. So, if you haven't given your broker any special permission like power of attorney or DDPI, you need to use a DIS, that is the delivery instruction slip, every time you want to transfer your share from your account to the someone else account, or if in the case of every selling transaction. Here some fee charges are also involved into the DIS system. So, you need to charge rupees 25 for each type of share that is transferred in a single request, plus 18% of the GST is added for the purpose of transferring the share from one demat account to the another. For example, suppose that you are transferring 3 different types of share in one go, your total charges will be equal to rupees 75 plus 18% of GST applied. Suppose that if you are transferring the same share in 2 different requests, in such case also your charges will be equivalent to 50 rupees plus 18% of the GST. Now, Let us understand about the concept of power of attorney. We had discussed that when the broker is not having the POA or DDPI, then the investor needs to give them the authority to transfer the share with the help of the DIS. So let us first understand what do we mean by the term power of attorney, and then we'll be going to discuss about the DDPI. So basically, power of attorney is a kind of legal document where one or more people may allow someone else to act on their behalf. So here the investor can allow the brokers and depository participant to act on their behalf for the purpose of transferring the shares from their demat account to the someone else account. So in the stock market, the POA is basically an agreement between the client, that is the investor, and the broker, with the help of which you are trading into the stock market. So it gives the broker some limited rights related with the management of the demat account and their actions. So in case of selling, the transfer of shares can be done with the help of the broker on behalf of the investor if they have the power of attorney. So when you sell a share, the power of attorney allows the broker to debit those shares from your account and deliver them to the buyer of the share. So this helps in a faster, smoother transactions without needing the manual approval from the client or the investor. So here you need not to fill any delivery instruction slip for the purpose of completing your sale into the stock market, and your broker can act on your behalf if they are having the power of attorney authorization. Now let us understand the concept of DDPI, that is the Demat Debit and Pledge Instruction. The Demat Debit and Pledge Instruction is also a kind of document that give your stockbroker and depository participant a permission to access the Demat account of your investor only for the purpose of some specific purposes. So let us know what are those specific purposes. So first, for transferring the share from your demat account and to settle your trade made on the stock exchanges. So in case of sales, you can take the method of demat debit and pledge instruction, as well as in case if you are pledging or repledging the securities to a broker or a clearing member to meet the margin requirements for the trading. So if you want to pledge or repledge your share securities for fulfilling the margin requirements with the stockbroker or a clearing member, you can take the help of demat debit and pledge instructions. Next is for carrying out mutual fund transactions through the stock exchanges, and for tendering shares during open offers, like in case of buybacks or takeovers through the exchange platform, you can take the help of the demat debit and pledge instruction. Now let us discuss the various benefits that are associated with the delivery instruction slip. Why the investor must choose the delivery instruction slip method if they do not want to use the power of attorney or debit pledge instruction. So basically it helps to maintain the safety in the transaction. Delivery instruction slip ensures that the safety of the transaction must be maintained, and from transferring the share certificates from one account and the other, the authorized and legal framework must be used for the purpose of reducing the risk involved in the transfer procedure. It is useful for less technological persons, so those investors who are not very tech savvy and they avoid the use of internet and technology for the purpose of trading into the market, they can take the help of delivery instruction slip, and in an offline form they can share the transfer without needing the online access. Now let us discuss the next benefit. The control over the account is maintained in case of the delivery instruction slip. Whenever you give the delivery instruction slip to your broker for transferring your share from your account to the another, it helps you to retain the control of your account, and without proper instruction, no one else will be able to transfer the share from your account to the anyone else account. As well as it is also useful for gifting or off-market transfers. So it helps in enabling the transactions such as share transfer as gift or private transaction outside the stock exchanges. So these are the benefits of the delivery instruction slip. Now, in the next part of our lecture, we will be going to discuss about the concept of blue chip companies, how the concept of blue chip company may be very beneficial for an investor to identify the different classes of asset in which they can invest, and they can also have long term wealth maximization, as well as the risk can also be minimized. So basically, blue chip companies are large and financially strong and well established firm in the market, those that are known for their reputation, for their consistent performance in the stock exchanges. So they are, you can say, an important constituent of the economy, and their reputation in the market and their financial performance is always growing, and as well as they are also offering their investor a good return over a period of time. So these companies basically have a long track record of stability, profitability, and they are seen as a source of reliable investor by both the traders and the long-term investors into the market. So as we have discussed that they are very important constituent of the economy, they are known for their good financial performance, their values, their ethics that they invest into their business policies. So blue chip stocks basically are the shares and financial instrument of those companies that are having a long track record of the good financial performance, as well as a good track record into the economy. So these are issued by such companies which are often highly valued due to the firm's strong market presence and financial health in the economy. So basically, blue chip companies may help the investor to identify the stocks those may offer them steady as well as regular income. So regular dividend payouts may be possible for an investor who invests into the company stocks of the blue chip company. So it makes a popular choice of investment for all those investors who are seeking low risk investment, and they are also aiming at having higher returns from their investments. These companies basically have a large market capitalization. That means in economy they have a large market share, and they are the respected leaders in their sectors of the economy. That means in their industry they are the market leaders. So one of the very important reason for their popularity is that they often distribute attractive dividend to their investors that may add the appeal into prospective investors who are income focused investors. So these type of company may offer you a very good financial reward for investing in them, as well as they are also a credible and trustworthy companies for the purpose of investment. Now, they also the investment option in the blue chip stocks may include the buying and selling of the shares directly, or investing through the mutual funds that focus on large cap and blue chip portfolios. And before putting your money into the blue chip stock, it is important that the investors must understand the company's fundamentals, and they should also compare the company's fundamentals, their policies, their financial plan with their own financial plans, so as to have maximum investments reward with the help of investing into the blue chip companies. Now, let us discuss some of the key traits of the blue chip company, how you can identify that these are the companies that may come into the category of blue chip company in an economy. So these are the key characteristic of the blue chip companies. The first one is it may have a high market value and a strong reputation. So blue chip companies are the major players in the economy in their sectors. They share a large market segment, as well as they have a solid credibility among the customers and the investors of their products and stock. So the shares of these companies are often considered as premium due to the strength and reliability of the business. They offer reliable earnings and dividends to their investor. So these companies regularly generate profit, as well as they also very often pay dividend to their investors. So investors can easily track their financial performance, making it easier with the help of estimating the returns from the investment that they can have by investing into the blue chip companies. Now, they also have some consistent growth over time. So, they are known basically for the steady and sustainable growth. So, they do not offer you a very high amount of return in a very short span of time. In a longer period of time, you will find out the sustainable growth of this type of company. So, blue chip firm basically tend to show a reliable stock appreciation in the market, and global giants like Nestle, Coca-Cola and McDonald's are some classic examples of such kind of blue chip companies, those who are known for their long-term success and stable performance in the market, as well as they have their loyal customers and investors also. Then they have a strong financial stability. So with plenty of capital and low debt risk, these companies can comfortably meet their financial commitments of modernization and expansion. So their presence are in the industry are well known, and all the stock exchanges such as NSE and BSE, they have their presence on their platforms, as well as they also add to the transparency and credit worthiness of the various platforms such as NSE and BSE when they add their shares into such kind of exchanges. Then next key trait of the blue chip company is that it has a long-term investment option for the prospective investors. These are suitable for the long-term investors, typically for those who want to averse the risk and invest their money at least for a 7-year or more than 7-year period. So those who want to achieve big financial goals like their retirement planning, their wealth creation, they can take the blue chip companies as a good option for the investment. The risk involved into the investment of the money into such kind of companies are compared to the other stock are very lesser as compared to the blue chip companies. So these stocks are basically considered safer due to the company's proven track record, and investing into such type of companies may be very helpful for the investor to achieve their long-term financial growth. Now, let us discuss the taxation effect of the blue chip companies. What different kind of taxation effect the investor may feel when they invest their money into the blue chip company. So, in case of gains, if you are having financial income or reward by investing into the blue chip company, the profits from the blue chip stock investments are taxed like any other equity investment. So in case if you are investing your money for a period of less than 1 year, then it will be considered as a short term capital gain, and it will be taxed at the rate of 15%. Whereas if you invest your money more than for 1 year of time, then it will be considered as a long term capital gain, and if it is an amount of above than 1 lakh rupees, it will be taxed at the rate of 10%. So investment into such kind of securities may also qualify for certain tax benefit under section 80C depending on the investment vehicle used by the investor, such as if you are investing with the help of the equity linked saving schemes or any other mutual fund or ULIP plan into these blue chip companies, then you may also ask for the deduction under section 80C of the Income Tax Act. Now, let us understand what benefits an investor can have by investing into the blue chip companies. So the first is, benefit of investing into the blue chip company is stability. These stocks are basically stable in the market because they are usually the market leaders of their industry. So they have a long history of success, and that is why they provide consistent and regular returns to their consumers. So a stability in financial income can be achieved with the help of investing into blue chip company. The second one is reputation. So blue chip companies have a good reputation in the market due to their values, their mission and their objectives that they have. So due to the core business values, they have a respected and reputation into the market and a goodwill into the market. So their management is respected and there is a strong brand identity of the blue chip company into the market. So this makes them less risky as compared to the smaller or more speculative companies that are available in the market. Now, the next benefit of investing into the blue chip company is the dividends or the profits that the investor wants from their investors. So many blue chip company often announce regular dividends to their investor and they create a steady income stream for them. So this may be very important for the investors that they need not to depend on the market fluctuation and demand and supply of the stocks in which they are investing for the purpose of earning profits from the market. So reliable return in the form of dividend can be gained with the help of the blue chip companies. So income growth is possible over time in case if you invest into the blue chip companies stock. Then comes the growth potential. If we talk about the growth potential, the blue chip stocks are seen as conservative investments. So they offer you the growth opportunities, but due to the fact that they are less riskier, they give you steady and regular return and a stream of income. So they do not offer you a higher and enhanced profit. These companies often expand their operation, enter into the new market or innovate with the new products and services, but they do not offer you a high amount of return overnight, and they may offer a good growth potential during a particular span of time, say 5 to 10 years. Now, let us discuss what are the various top blue chip companies in India and what are the various types of stocks of the blue chip companies as of April 2025. So Reliance Industry Limited is there with a market capitalization of 19.91 trillion. It is a diversified conglomerate that have their interest in the petrochemicals, refining, oil, telecommunication and retail sector of the economy. Then we have Tata Consultancy Services. This is also a big name in the blue chip companies with a market capitalization of 15.86 trillion. It is also a legal global IT services and consulting firm, and it is a part of the Tata Group. Next is HDFC Bank Limited. It also has a market capitalization of 13.07 trillion. So it is also one of India's largest private sector bank that is offering a wide range of banking products and financial services to the consumers. Now, the next one is the ICICI Bank Limited, that is having a market capitalization of 9 trillion, and it is considered as a major private sector bank that is providing banking and financial services across India to the rural as well as the urban citizens of the nation. Next one is the Bharti Airtel Limited, that is having a market capitalization of 9.79 trillion. It is considered as a prominent telecommunication company that is offering mobile voice and data services across the multiple countries to the various citizens of the nations. Now, let us understand how a company is recognized to be a blue chip company. So when they have a large market capitalization, they can be recognized as a blue chip company. So basically they have a typically large cap with the valuation in the billions. So they are often having a large market capitalization. They are also leaders in their respective industries, so such as the tech giants or any other consumer good companies, they will be the name, or you can say the brand identity of that particular industry. After that, they may have a strong and consistent financial performance. Blue chip companies basically have a good history of steady revenue and profit growth over a long period of time. So, they maintain a strong balance sheet, they are characterized by low debt and high returns on equity for their company. After that, they can also be recognized on the basis of the dividends or the profits that they share with their investors. So, steady and reliable dividends are offered by the companies to their investor in case of the blue chip company. So, this makes them more appealing for the long term investor to invest into such kind of companies. They have a strong presence in the major market indexes. So, you can find a significant number of blue chip stocks that are included into the key stock market indices such as Dow Jones Industrial Average, S&P 500, FTSE 100 in the UK and Nifty 50 in India. These different indices may include the major blue chip companies of the economy where the investor wants to trade. So, on the basis of which you can recognize whether the company is blue chip or not is the performance metrics and the valuation. So, one of the very important performance metric is the price to earning ratio. So, blue chip companies often have stable earnings and they tend to show a high profit to earning ratio. So, they can reflect a higher amount of confidence of the investor into their returns. So, for instance, like tech giants are there like Apple and Microsoft, they may have a higher PE ratio as compared to the other companies in their industry and in the other sectors due to their expected future growth, and they also have a great confidence of the prospective investor. Then price to book ratio is also a performance matrix and valuation criteria for the blue chip company. So, this matrix basically helps the investor to understand whether the blue chip company is undervalued or overvalued and take a decision on the basis of this particular information. So, for example, if there is low price to book ratio, that means the company is undervalued, and in such case buying the stocks of such company may be beneficial for the investor for the future time, and the vice versa condition may also be there. That means if the high PB ratio is there, that means the company is overvalued, and in such cases there not be a good buying opportunity, and if you are having the shares, you must sell those shares into the financial market. So, these are the various discussions and aspects related with the delivery instruction slip and the power of attorney and the DDPI system, with the help of which the investor can transfer their shares from their demat account to the another demat account in case of sale transaction, as well as the concepts like blue chip company that can help an investor to decide in which of the investment avenues they want to invest, and they can manage their financial objectives and manage their personal finance with the help of knowledge of all these concepts. So, with this we come to an end of this lecture. Thank you.